Well, hello again. Guess what? It's Joe, and it is another candlestick pattern. Today is the dark cloud cover. Now, folks, I'll be honest, the dark cloud cover was something that I misinterpreted quite a bit. And so I'm excited to get into this class and talk about it. But let's talk about what it is and what we can expect it to do. In order to get that, we're going to go to the Thomas Bulkowski website and nerd out on some details. So the theoretical performance for this dark cloud cover candlestick pattern is a bearish reversal. Now, this bearish reversal happens 60% of the time. This is kind of a reliable pattern. It's one that I used for many, many years as a day trader. But like I tell you, I was just kind of miscalculating it. Frequency rank is about 46 out of 103, so it happens just over, it's not that common, but it's not that rare. It's right over the cusp of, hey, you'll come across them more often than you think. Now, overall, we can expect the performance on this 22 out of 103, and the reason being the performance is actually on the higher side because the best percentage meeting its price target is 62% of the time. So not only does this trigger a bear reversal 60% of the time, it can reach that price target 62% of the time, which is why I think Bulkowski gave it a performance rank of 22 out of the 103 patterns that he measures. Now, the best average move in 10 days I thought was interesting. 5.36% to the upside. I've got some examples that will actually show us that, boy, when these do break, they only break for a while and then they turn right around. As always, I'm going to throw my 2 cents onto it. And actually, the Maverick way, hey, we got to wait for confirmation either up or down to see if these are going to continue higher or if they are indeed, in this case, roll over and play the bearish side that we're looking for. So the best 10-day performance rank is 19th. So it is also on the high side. And once again, I'm just going to go ahead and say, hey, that 5.36%. Now, Bulkowski looks for 6% or higher, and he gives it a better rank. This is under that. This is 5.36%. So it's just shy, but it's still 19 out of 103. It's in the upper range. So let's break down this pattern in my little visual frame that I've got here. Now, since it is a bearish reversal pattern, we do need a bullish surge up to it. I've got the 3 candlesticks. I don't think it really matters how many candlesticks go into the dark cloud cover. But here's number 1 of how I was misinterpreting this pattern together. It's actually a combination of 2 candlesticks. Dark cloud cover, you can see, is a bullish candlestick, and then afterwards is the bearish candlestick that covers the bull. Now, let's get into some more details. So yeah, the first thing that I made a mistake of was thinking that the dark cloud cover was just 1 candlestick and it didn't matter what it covered. That's not true. It has to cover a bullish candle. A couple other things I thought was pretty interesting. It's fun to learn as I teach is that the open of this candle, this bear one, has to be above the green candle or the bull candle's high. Not above its close, its body here. It has to be above its high. Another thing to make note of, it has to be at least the close of the red candle needs to be at or below half of the previous candle. In fact, Bulkowski said lower 1/3 is where he likes to see these triggers. So couple of things that I didn't know when I was misinterpreting them. I always saw them as a capitulation or kind of a move to the upside, a blow off top. That's how I was seeing. But the dark cloud cover itself is a combination of these 2 candles. So what are we going to take away from this? Once again, it's got to be above the high. The open of the bear candle has to be above the previous candle's high, which has to be bullish. Then the close of this bearish candle has to be in the half to lower 1/3 of the previous bull candle. Easy enough? Now, confirmation to the downside, and remember these confirmed to the downside 60% of the time, is simply a close below the low of the second part of the dark cloud cover pattern. Now, Bulkowski said that 63% of the time these actually met their price target. And you can see that how his price targets are measured. We'll do this one more time because I love drawing stuff, right, nerding out, is you take the complete range of the pattern itself and add it to a direction. So let's say that's about equal. So this would be its target of the full range of the pattern itself. And that's all Bulkowski needs to see when it comes to exceeding its target. So, or I should say, achieving its target. So I like these odds. I like 60% of the time these will trigger to the downside. 60% of the time you will get this red candlestick. And then 62 or 63% of the time it will reach the extension of the pattern itself. So if you're in quick, meaning, hey, let's see, and don't expect this thing to fall apart or really change trend, then this is going to give us our probabilities. So let's talk about the setup conditions that I'm looking for when it comes to this. And yes, that's folks, I'm going to add a little bit of Maverick into what I'm getting out of the Bolkowski website. This is what's so cool is you can take these numbers and interpret any way you want. I like to see an uptrending chart. That's kind of where I want to see because I like to see a little bit of a push or an exhaustion to the upside before it kind of pulls back. So an uptrending chart, but you can find these in sideways trends or even downtrending chart. These are actually a pretty good end of a bear rally. So you can use that in either direction. After a gap above the previous day's high. That's exactly right. So understand, we almost have this on this chart. Now, folks, this chart is just a blank chart that I've used for every single one of the candlesticks I've talked about. However, we kind of have a dark cloud cover pattern in it right there. So it has to gap higher and then come back down. It has to gap above the previous day's high. And that previous day's high has to be a bullish candlestick. Confirmation will be below the pattern's low. Remember, folks, I thought the pattern was just one candlestick. It's actually the combination of the bull candle followed by the red candle. So the below that low. And then it's got mid-level frequency with mid-level performance. And this is something that I kind of like. I'm not trying to shoot for the moon here. I don't want a very rare pattern that's very hard to find. And hopefully I get a big move. I like something that's pretty consistent. When I play the 60s, right? 60% of the time this confirms the downside. 63% of the time it can meet its price target. I like those odds. Now understand, 60% leaves 40% to be wrong. So something that's going to be down the line and longer term. Remember, Bolkowski found that after 10 days, this actually turned around and went higher by 5.36%. So let's get into our example. I've got one already queued up and ready to go. And let me zoom in on this a little bit because I want to get a little bit more specific on when the pattern develops. So the first thing you guys will notice is that we're actually already in a downtrend. And I do like these when you have an oversold bounce or an oversold move to the downside and a huge move up, like a big bullish surge in a bear market. Now, I preferred, and that's why you guys saw on the chart, uptrend. An uptrend with a pullback and a big move and an exhaustion move to the upside will also create the ability for this to pull back. So we just need to see the dark cloud cover in the right context. Now, with this being a downtrend, we're going to go ahead and see how far it goes before it actually sets this up. Now, this is actually having a move to the upside. We'd expect that, and this is where we get our dark cloud cover. Now, interesting, because we had a bounce off of our lower pivot low. So we had this pivot low and a pivot low here, and it looks like it's going to be something similar to this, a little bit of a bull, or I should say a bear rally, a bullish move in a downtrend. Now, we do have our dark cloud cover right there. So our confirmation is going to be below the low. And that's kind of tough, right? Because that's got to move pretty far. And then we would expect this same measurement. I'm going to try to free draw this. Ooh, that might be a little bit more than I expect. Maybe somewhere around this area. Let me just redraw that. To be our target, right? So probably right around there. So it's got to confirm here and to expect a target of there. Now that's playing the 60% of the time it goes down, and the 63% of the time it will meet its target. Understand, guys, that leaves 40% of the time it doesn't, right? And 38 or 37% it won't reach its target. So let's go ahead and give this a couple more days and see where this ends up. Now I'm going to go ahead and just give it the Bolkowski 10 days, and then we'll talk about it. So there is the pattern. Here's 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. And this didn't seem to really go anywhere. A couple things that I liked about this. 60% of the time it confirms the downside. It sure didn't. It actually broke above the upside. This is the confirmation that the pattern failed and it could move higher. But then it kind of pulled right back and didn't really go anywhere. So if we take the close, let's draw some lines just for fun. The close of the pattern itself, and 10 days later, the close of where, as you can see, that this was just a small move to the upside. It didn't really go anywhere. So that one really didn't help us. So there's our first example. Let's move on to the next and see if we get any sort of different results. All right, guys, moving over to our next example. I know this was keyed up because what I wanted to see was something right around a resistance level, right? Kind of a high base. But if you notice here, we almost have a dark cloud cover there. The only reason I'm not going to give it to it is because this close was, or the open was right at the high. It wasn't quite above the high. So I went ahead and threw it out. Let's go ahead and go to the setup that I was looking at. Let's give it a couple of days. Pulled back, nice big bull candlestick there, and there it is. Nice and clean, right? Good move to the upside. We got the dark cloud cover candle. Now what's really cool about this is outside of Bulkowski, this is now Maverick, is it's right at a resistance level. A lot of traders will call this kind of a high basing pattern. You could refer to it as an ascending triangle pattern. So let's see how this plays out. Now I would assume the resistance would hold, but let me finish our thought on this. We need to see this close below that low or above that high, correct? Okay, so let's see if that can't happen over the next couple of days. Wait, we got to give it 10 days. That's correct. Okay, let's count them together. Okay, so after 10 days, we did get our 60%. 60% of the time, this will confirm, and that's exactly what it did. Now, 63% of the time, it will exceed with a target. Now, let's see if this low actually hit that. It will exceed its target price, I should say, or reach its target price. So let's see if that happened. Let me do my best to draw here. Okay, about that big of a range, and let's see if I can't just freehand down. I'm going to go ahead and say it didn't quite get there, but it's pretty darn close if you take in consideration that low. But it was quick. It confirmed and hit its and came close to the target very, very quickly. So that 60% of the time is great to have, but it doesn't mean in a 10-day span you guys can see this thing finished basically where it started. Let's take a look at one more example. All right, a quick setup on this one. It looks like this is going to be another downtrend. Right? Looks like we've got a little bit of a downtrend here to see if we can't get a little bit of a push higher, maybe that dark cloud cover, and see if we can't get this thing to roll over. So I've been talking a whole lot about an uptrend stock, but downtrends are working as well. It just depends on where you find them. So let's go ahead and see where this ends up, or let's go ahead and move forward to where we can find our pattern. Okay, good move to the downside, but this is almost the opposite of a dark cloud cover, right? I don't know what you want to call that, guys, but we have the exact opposite. A gap below the low and came and closed within the red candle's high. Could this be a reversal to the upside? It's the exact inverse of dark cloud cover. All right, let's move forward and see if it's to set up the candlestick that I'm looking for. And there it is. We've got all sorts of different candlesticks going all over the place. Now, what's really tough about this is if you're not looking for it like I was with these examples, they can slide right past you. I really like to take the candlestick patterns, the percentages, we'll call it the Bulkowski nerd out sessions, and add them to specific support resistance movements and price action within charts. What do we got? Well, here it is. We have our, try to box this bad boy in. That is our dark cloud cover. So that being said, let's go ahead and give it its 10 days and find out exactly where this ends up. Okay, so we're 3 for 3 here, folks. When it comes to after the 10 days, we didn't really do much. I'll just kind of highlight it one more time. This is the pattern that we were looking for. This is the confirmation to the upside where you could see it didn't, but it did, however, confirm. It definitely confirmed. It did the other 60%. And I'm going to go ahead and say it absolutely hit its target, a little bit lower, in fact. And then it came back and actually almost hit it again. So in this situation, after 2 or 3 or 4 days, and that was with the last example, this actually did confirm to the downside, and it actually did exceed its target. It just was very, very soon. After the 10 days, they ended up going pretty much nowhere. If you talk about where you got in and where it ended after 10 days, they're flat. So this leads me to believe this could be a super powerful pattern, and I do like the 60% of the time it triggers the downside. I love the 63% of the time it actually confirms its target. But I'll tell you what, holding this thing after 10 days, or in these kind of examples, anything past 5 or 6, that could erase pretty quickly. So it doesn't matter where you find it, uptrend or downtrend. If you're going to play it, let's make sure that we correlate it with something that's measurable. Okay, folks, well, to summarize, what did we learn here? The pattern frequency is 46. It's slightly above average. The pattern rank is also, though, above average at 22 out of 103. And I do think the pattern rank is because of that 60% of the time it goes to the downside, and then the 63% of the time it can reach its initial target. So look for exhaustion to the upside is how I played this. Now, I told you guys I would talk about my past and how I misinterpreted these. I misinterpreted these as capitulation moves, as a huge gap to the upside and it came falling down. What I didn't understand is that you needed a bullish candle to correlate with dark cloud cover. So what I was looking for are very rare candlestick patterns, capitulations, blow-off tops, things that happen very rarely. If you want to find them in exhaustion situations, it will be to the upside. But you could see with the examples that we had, you can find them in bull pullbacks, downside moves, downtrending stocks that are having, maybe they bouncing really hard off of the bottom, that bounce stops and you get a little bit of a cloud cover to say, hey, we might be overextended in the shorter term. I'll go either way, but I did put down for the exhaustion to the upside. All right, folks. Well, thank you so much for joining me, and we'll see you next time. Bye, everybody.